Welcome, great hopes. Today I've selected for you this question paper from Pumalanga June exam 2023. Question 1.2. You are provided with information relating to Robotics Limited for the year ended 31 May 2023. The requirements: complete the current assets section of the statement of the financial position for the year ended 31 May 2023. Okay, we are given the extract from the records on the 31st of May 2023. We are also given additional information. Okay, remember when we are doing the when we are doing the statement of the financial position and then we are looking at the current assets section, we only have three current assets that we record there. That is inventory, trade and other receivables, and also the cash and cash equivalents. And so also in that particular order, we call it the order of liquidity. So we are going to start with our inventories. Okay, we start this side. Okay, inventories. Okay, let's open our bracket. Let's go back to the extract from the information. Okay, remember it's 31 May 2023, so this is at the end. So this is the closing stock or the stock on hand. Trading stock is 616,750. 616,750. Okay, that's our trading stock. What else do we have? Let's look at the additional information. A robbery took place and 4,500 was stolen from the cash register. Already we can see that this item is going to affect our cash and cash equivalents, as well as 25,000 worth of stock. So stock worth or valued at 25,000 was stolen. So that is a minus on our inventories, minus 25,000. Okay, let's proceed. Outsurance had advised that the cash is not insured, but the stock is insured. Okay, the loss on the stock is 15%, which we will record anyway in the income statement, and they will pay out the difference in March 2023. So Outsurance is going to insure the business for the stock that was stolen, but they are not insuring them for 100% value. They are going to give them 100 minus 15%, which means they are going to insure them 85% of the 25,000 that is given there. Okay, so in other words, we are going to say 25,000 rand, the value of the stock that was stolen, times 85%. Okay, which will give us something like 21,250. So this is the amount which is going to be paid back to the Robotics Limited company for the loss of the stock that was valued at 25,000. Okay, what else do we have that is affecting our stock? We've got B, consumable stores. Okay, we need the consumable stores on hand. Consumable stores available during the year, there were 3,350. The consumable stores that were used during the year, 3,150. So we look at what was available minus what was used, and what remained is the consumable stores on hand. Okay, so we're going to say plus, okay, I'll open a bracket here, 3,350 minus 3,150. Okay, it will give us something like 200 here. So the consumable stores on hand is 200. Okay, I don't see anything else that is a part of the inventories. Okay, so now we can add everything and subtract the 25,000. Our final amount remaining will actually be 591,950. 591,950. That is the amount for our inventories. After the inventories, we have got the trade and other receivables. Trade and other receivables. Okay, what do we have? Do we have debtors control? Okay, debtors control is given here, 153,500, 153,000 and 500. Okay, what else do we have? Okay, let's go back to A, to the information on A. Remember the 25,000 that was stolen, and the insurance company which said they are going to give them 85%, which I did the calculation here to say they are going to be given back stock to the value of, or the amount, 21,250. So in other words, the insurance company is owing the business 21,250. So they become debtors to the business. Okay, so we are going to say plus 21,250. Okay, I hope you understood that part. What else do we have? We also have got adjustment number D. The provision for bad debts decreased with 8,000, is it? Okay, how much were the provision for bad debts? They were, okay, from the information given, they are 19,000, is it? So 19,000 minus 8,000, we remain with 11,000. This is the new provision for bad debts. So we are supposed to reduce our debtors control by 11,000. So we're going to say minus 11,000. Okay, do we still have anything else that is a part of the trade and other receivables? Let's look at the information that is given. Let's look at C. The interest rate, the correct interest for the year is calculated 14,400. One of the fixed deposit amounting to 40,000 expires on 30 June. Okay, this will affect the cash and cash equivalents. Okay, Robotics Limited decided to buy back cash and cash equivalents. And then the net profit after tax is 598,000. Income tax is calculated 27% of the net profit. Let's calculate and find out whether we have got an overpayment of SARS or any prepaid expense. Okay, the SARS income tax provisional tax, or the provisional tax which was already made, is 390,000. Okay, the income tax at the end of the year is 27%, but we do not know how much the 27% is, but the net profit after tax is already given. So this amount shows money where 27% has already been subtracted. So it means this money is no longer 100%, but it is now the difference between 100% and 27% is 73%. So if we want to find out how much is the 27%, this is what we simply do. We are going to say the 27% over the 73 that is already given, multiplied by the net profit after tax that is given, 598,600. Okay, when we do this calculation, let me check on my calculator how much we are going to get after doing the calculation. We'll get something like 221,400. 221,400 was the tax which was declared by SARS after the assessment from SARS, or the tax at the end of the year is 221,400. But already 390,000 has already been paid, is it? So it means they actually overpaid SARS. Let's find out by how much. 390,000 minus 221,400. We are going to get 168,600. 168,600 is a prepaid expense, and prepaid expenses are part of what? The trade and other receivables. Okay, so the 168,600, we are going to add it to the trade and other receivables. We are going to say plus 168,600 for the prepaid expense on the tax. Okay, that is all on the trade and other receivables. Let's add everything and find out how much it is now. How much is the total? Okay, it will give us 332,350. 332,350. Okay, now we are going on to the last one, the last item, the cash and cash equivalents. The cash and cash equivalents. Okay, do we have bank? Do we have cash flow? Do we have petty cash? Okay, from the extract, we have got bank 75,000. Okay, 75,000. What else do we have? We've got cash float 9,000 plus 9,000. We're going to say plus the 9,000 for the cash float. Okay, what else do we have? Let's go on to the adjustment number A. Remember, 4,500 was stolen, is it? Automatically, it means that reduced our cash resources, minus 4,500, which was stolen. What else do we have? Adjustment number C, the fixed deposit. One of the fixed deposit amounting to 40,000 expires on 30 June 2023. When a fixed deposit expires, it means it is matured. And when a fixed deposit matures, it means the money goes back to the bank account. So the bank account is increasing by 40,000. So we are going to say plus 40,000, the fixed deposit which is matured. Okay, what else do we have which is affecting our cash? On E, Robotics Limited decided to buy back 2,000 shares from a shareholder at 27 Rand 50 cents. Okay, so we are going to say 2,000 shares times 27 Rand 50 is going to give us something like 55,000. 55,000 rand. This is the money that was spent to buy to make the buyback of shares. So this is going to reduce our cash resources by 55,000. Okay, that is all on the cash and cash equivalents. Now we can safely calculate the total for the cash and cash equivalents, which is something like 64,500. I hope there are no errors in my calculation. You can also check with me. So like what I said, this is the note for the current assets. It is made up of 3 items: inventories, trade and other receivables, and cash equivalents. And in this order, this is called the order of liquidity: inventories, trade and other